Today, we're diving into an investment thesis on Kinross Gold, a company that the source material argues has fundamentally transformed. We're going to look at how it went from being a perennial underperformer to what's now being called a capital return machine. So let's just jump right in with this really powerful statement from the source, which claims that for Kinross Gold, the show me story is over. What does that mean? Well, you know how some stocks always have you waiting for them to prove themselves? The argument here is that for Kinross, that period of doubt is done. The proof is already here.
And wow, this slide really just lays it all out, doesn't it? On the left, you've got the old Kinross. It was seen as a classic value trap. That's a stock that looks cheap, but just never goes up. It was bogged down by geopolitical drama and this constant worry that its mines were about to run dry. But on the right, that's the new Kinross, a company with financial muscle, a world-class growth project, and a serious focus on buying back its own stock. A total night and day difference.
All right, so first up, a company transformed. Let's dig into how exactly Kinross managed to pull this off, how it shed that old, tired reputation and basically built a whole new identity in the market. Okay, so that's the story. But you know what they say? The proof is in the numbers. So now we're going to talk about the cash printing machine. This is really the foundation of the whole argument, the company's undeniable and frankly, incredible financial strength. Okay, so first things first, we gotta understand this term because it's a huge deal in the mining world. See, most miners are just swimming in debt. It costs a fortune to dig these massive holes in the ground. But the argument here is that Kinross has totally flipped the script. They've built what's called a fortress balance sheet, which makes them unbelievably resilient.
And here it is, the proof in black and white. Almost $500 million in net cash. Let me say that again. That means after you pay off every single penny of debt they have, they would still have about $485 million in cash sitting in the bank. For a miner, that is almost unheard of. It just completely de-risks the whole situation.
And if that wasn't enough, just look at the cash the company is cranking out. This number, $687 million, that's not for a year. That's the free cash flow they generated in one single quarter. It just shows you how ridiculously profitable their operations are right now. So you might be asking, where is all this cash coming from? Well, this chart tells the whole story. Look at this. Their costs to pull an ounce of gold out of the ground have stayed pretty stable, but the price they're selling it for has absolutely skyrocketed. What's the result? A massive 54% explosion in their profit margins, year over year. Now here's the kicker. They aren't just sitting on a mountain of cash like a dragon. No, they're giving it back to shareholders aggressively. They've jacked up their share buyback program and given the dividend a nice 17% hike. For a trader, those buybacks are huge. It means the company itself is constantly in the market buying its own stock, which creates a kind of soft floor underneath the share price. Okay, so the balance sheet is rock solid. The cash flow is incredible. But what about the future? That's where things get really exciting. Let's talk about Canada's next potential supermine and how Kinross is building its next big growth engine. And here it is, the Great Bear Project. They're calling it the crown jewel for a reason. This thing is a world-class deposit. And maybe even more importantly, it's in a super safe jurisdiction in Ontario, Canada. This is the silver bullet that answers all those old fears about asset life. This mine promises to be churning out high-grade gold for a long, long time, securing the company's future. And look, this isn't just some pipe dream they're talking about for 20 years from now. They've got a concrete timeline. The early work is already done. The heavy spending to actually build the mine kicks off in 2027, and they're expecting to pour their first gold bar around 2029. It's a clear, believable path from a patch of dirt to a producing mine. So Great Bear is the big, shiny prize down the road. But what about right now? Well, there's an immediate catalyst on the horizon to keep an eye on. They're expecting a study on an expansion at their Round Mountain mine in Nevada. If that comes back positive, it could add a nice chunk of value in the very near term. All right, so the story is compelling. The numbers are solid, the future looks bright. But how do you actually trade this? Let's switch gears and put on our trader's hat to analyze the playbook here. Every trade has its pros and cons, right? So let's break it down. The strengths are obvious. That net cash balance sheet and the Great Bear Project. The weaknesses? Well, they still have mines in some tricky places, and building Great Bear's gonna cost a lot of money. But then you have the opportunities, like that Round Mountain project, and the fact that a company this strong could easily get bought out. And the threats are the usual suspects for any miner: potential delays and rising costs. And it's not just the fundamentals screaming buy. The technical picture, the stock chart itself, is looking really, really bullish. It's in a confirmed uptrend, it just smashed through a key resistance level, and there's been a ton of buying volume. It looks like the big institutions are quietly loading up on shares.
So based on all that, the source material lays out a very specific game plan. You've got your entry points, whether you want to be aggressive or a bit more conservative. You've got your stop loss, your get me out of here level if things go south, and you've got 2 clear price targets to aim for on the upside. It's a full roadmap. Okay, let's pull all these threads together. We've seen the old Kinross, the new Kinross, the money, the future, and the trade setup. So, what's the bottom line? Let's get to the final verdict.
The verdict from this analysis is crystal clear: a strong buy. And the reason is simple but powerful. The argument is you're not just buying a gold miner here. You're buying a cash printing machine that also happens to come with this incredible growth story already built in for the future. It's a rare 1-2 punch.
So if you're going to remember anything from this, remember these 4 things. This is the whole thesis in a nutshell. You've got that pristine balance sheet, the aggressive buybacks putting cash in your pocket, the Great Bear Project fueling future growth, and a strong chart that suggests the momentum is just getting started.
And that leaves us with one final, pretty big question. Given everything we've seen, the cash, the growth, the safe jurisdiction, the analysis poses this idea. Maybe the question isn't just, is Kinross a good investment anymore? Maybe the real question is Kinross setting a new gold standard for how a mining company